Welcome, everyone, to the 10th episode of Reserve Only, a podcast focused on bringing to light information about Reserve. My name is Braden, and today I have the pleasure of hosting the podcast with Flamingo Mafia, who I will let introduce himself.
Yeah, hey guys. Everybody calls me Flamingo or Flamingo Mafia. I've been a community member since 2020. Um, kind of just tweet things here and there. Some people find them helpful, so that's kind of cool. That's my intro.
Um,
And
Go ahead.
yeah, and obviously, I mean, James, me and you have spoken before here and there, but for the wider community members, do you mind just giving an intro about yourself? Um, yeah, we'll start there.
Yeah, sounds great. Braden and Flamingo, thanks for hosting today. Really appreciate it. And thanks for all the folks in the audience here. So my background is I spent about 20 years building media companies and working in different types of venture capital and incubator scenarios. So I started at the KPMG Media Incubator in the 1990s, went on to a venture capital firm in Los Angeles called Zone Ventures at the time. This was all during kind of the dot-com bubble and bust. And then I went on to help grow and build a few different media companies you've heard of. So the first one was Turner Broadcasting, which owns CNN and TBS and TNT and a bunch of other assets. Later, Playboy Television, where I launched their video on demand business. Later, a company called Machinima, which is a video game entertainment network on top of YouTube. It was the biggest in the early kind of 2010s. And we sold that company to Warner Brothers in 2016. And then I went to help launch digital networks for Warner Brothers. That's where I spent a lot of my time. And then, I got curious about Bitcoin in 2013. I have one of my friends is a very early adopter, and was preaching on Facebook every day. We all know those people. And finally, I cracked and said, let me learn more about this. I wanted to. I read the white paper, didn't fully understand it, but put a little bit of skin in the game because that's a good way for me to learn, and began that journey. And similarly, when right after the DAO hack for Ethereum, I guess I can't remember if it was 2015 or 2016. The price of Ethereum dropped quite a bit. And it struck me as something that seemed pretty interesting and would last for a long time. So I jumped in there again for the same reason, just to learn it. I had no idea of whether or not I would make any money. In fact, by the way, when I bought Bitcoin the first time, it was at about $1,100. This was right before the Mount Gox hack. So so I paid quite a bit, and then 6 months later, Bitcoin was about $200, $300. So that's not exactly, when I saw that and I really didn't understand the technology, I was like, okay, I think I just lost all this money. But for whatever weird reason, I continued to, kind of accumulate during that bear market. Um, uh, it worked out well. And then 2017 rolled around, and I realized I wanted to move away from just holding a few of these assets to actually working in the space. It seemed very, very exciting to me. And honestly, if anyone here has ever worked in large corporations, they move really slow. There's a lot of meetings. It's a lot of politics. Um, some people love that. It's a nice paycheck, but I was really hungry to learn more about this technology. So partnered up with someone to help launch a few projects in 2017 at a crypto fund, and use that really to develop my own kind of thesis and sensitivities about what was important to me. When I started that process, I didn't even know what some of these things were that were happening. 2017 was like the big ICO boom, lots of projects launching. I didn't fully understand that. And, for me, the way I tend to learn things is really just putting some skin in the game, put some time in, and learn it that way. So by early 2018, I had gotten a sense of where I thought the market was going, even though I really didn't have that much experience. And then I sort of branched out on my own. I was really became super interested in curation economies and bonding curves. Now every DEX AMM pretty much is powered by a bonding curve. But back then, no one knew what a bonding curve was except for the people that invented it, which was Bancor. And maybe a few other folks. There's a couple of people that were writing about it a lot, but DeFi hadn't happened yet. But that caught my attention pretty early on. I thought it was pretty fascinating, as well as having come from the content business, thinking about how we could use distributed networks of curators to do the work of centralized institutions. About that same time is when I met Nevin, and I was a seed investor in Reserve. I had invested in several projects back then, and what struck me the most about Reserve and Nevin, there's a lot of charlatans and get rich quick schemes out there and all that kind of stuff. It's like the early days of a gold rush. And this has nothing to do with crypto. It happened with the internet in the 90s, happened with gold in the 1800s. Basically whenever there's a new technology, there's always kind of a gold rush associated with it, and you get all kinds of different players. But when I met Nevin and heard about Reserve, I was really impressed. I trusted him almost immediately. I felt like, wow, this is an interesting person. I'd like to, you know, uh, kind of be in business with, work with, learn from, in fact. And even then, back then, I believe the business plan for Reserve was an algorithmic stablecoin, which I barely understood. But when I make investments, I don't focus as much specifically on the product, or I didn't back then. I'm a little bit different now in how I choose. I focus on the people and the vision of what they're building. My feeling is great entrepreneurs with integrity will figure it out most of the time. And many times the early business plan of a seed stage project is wrong. It's almost always wrong. It's rarely right out of the gate. Like the times that it's right out of the gate is less than 1%, in my opinion. But but yeah, I was a seed investor in 2018 in Reserve, and then just kind of continued on my business, continuing to invest in the space and be an entrepreneur. And then Nevin and I reconnected early this year, and I had some, knowing that the protocol launch was coming soon. I pitched him a bunch of ideas for, how we could grow the ecosystem. And they were different ideas, but sort of related to what we're doing. They're related to what we're doing, but the structure of how I pitched them was different. And ultimately got to meet Thomas and talk about it more. And we decided it would be a good idea for me to join the team, see if I can contribute in that way. And that was pretty exciting to me because the other thing I've learned in the crypto space over the last many years is it's really complex stuff. It's really hard to build these things with advisors and consultants. You really got to have people who have deep skin in the game, who think about this stuff 24 hours a day, more or less. It's not a part time gig. Um, so I got to join the team and work with Smetty and Sinatra and Soham and Thomas and Nevin. Uh, I joined right before the Bogota launch, and I guess actually in about a week it will be my 3 month anniversary with Reserve. So I'll stop talking there for a second and see where we want to go next, Braden or
Yeah.
Flamingo.
Yeah. No, that's awesome. I mean, I was always curious, and I'm sure a lot of people were, of like how you know, what got you to go from seed investor to a more hands-on role and part of the team. So it's good that you touch base on that. And so when you first discovered Reserve, like, did you, because obviously, like you mentioned, Bitcoin, and these are like, more speculative assets, whereas like Reserve's vision was more like, something more concrete, something more useful with like daily utility, something that people use in their lives. Um, did like what? So I guess how do I word this? Yeah, what kind of like really attracted you to Reserve? Was it their vision or like a combination of like what they were trying to achieve, plus like you mentioned the team and Nevin and how ambitious they were and how yeah.
Yeah, I think there were probably three factors. Um, One was the person who introduced me to Nevin, Andrew Masanto. Andrew and I had collaborated on his work with Hashgraph, Hedera Hashgraph. And I respected Andrew. So that was the introduction. That's how I met Nevin. I'd say the second component, and especially at the time that I met Nevin, I was really attracted to mission driven entrepreneurs and projects because I had been surrounded by all the stuff you can imagine. We're all hearing about all these scams right now. 2017 was a big scam fest. And for every authentic entrepreneur, there would be 5 or 10 scam entrepreneurs. Not that they were necessarily intentionally scamming, but they just weren't fully committed to their what they were building. It was a very hot moment in time. So meeting Nevin, understanding the mission of what they were building, that got me pretty excited. When I make these investments, I don't do it. I'm probably a terrible investor, to be honest. I don't do it to make money. I do it to learn. Like that was the exciting. That's why I bought Bitcoin. That's why I bought Ethereum, and that's why I invested in Reserve. It's nice if I'd like to make money. That's a good idea. But the real reason I did these things is because I really wanted to learn it, and that's how I do my learning. And then the other what thing was specifically just in my conversations with Nevin. He was not a uh, you know he was just really kind of pragmatic. I felt like there was a lot of integrity there and a lot of commitment to the mission. It wasn't a flash in the pan type thing like a lot of what had happened in 2017 and 2018. So those were the three reasons. Again, the business plan back then was kind of like an algorithmic stablecoin, which was, seemed like moon math to me back then. And we had no reference points. Now we're all a lot more smarter about algorithmic stablecoins. Um, Most people kind of just witnessing the collapse of Terra Luna this year recognize all the flaws with that. And then it's also just worth acknowledging the other thing that Nevin did, over the course of the last 4 years is he really did some deep dives into what was then the basis protocol and the maker protocol and a couple of others. And these are like 1 hour read blog posts, they're probably 4 or 5 thousand words, which is a pretty brave position to take in the market. Um, but he did it in such a graceful way, actually collaborating with those protocols in a friendly, kind of positive sum way, and in a way that could probably help them. Basis ultimately did not launch. Maker did, and they've weathered a few storms, and they're, I think, doing a reasonably great job right now. But yeah, that's those were some of the things that kind of got me to pull the trigger on it. And to be honest, the gift that I've received of watching and learning of the last 4 years is worth far more than the actual investment. Um, yep.
What,
Yeah,
s-
that's really great to hear. I'll yeah, Braden, if you got something to add or follow up.
okay. Yeah, James, I mean, I think that's a really good story. I like it a lot. I am curious about like your perception on RPay. If you could you tell us more about that?
Sure. Yeah, and so, RPay has really been something that's grown up in that time, more so especially in the last year or two. I mean, this is pretty amazing. Reserve is really two projects, right? It's RPay, which is essentially like PayPal for Latin America, and it's growing really fast. It's kind of up about 15 or 16x from a year ago. It's about the size of Venmo in 2014, and it also creates a very interesting distribution vehicle for future R tokens. And then the second part of Reserve, which is the part that I'm focused on, and most of us here on the call are focused on, is the permissionless protocol, so that anyone can launch R tokens. And I think, what's interesting, maybe folks know this or not, Reserve's been working on all these things over almost 5 years, actually, but they kind of delayed the protocol launch in order to build out the RPay app business, and I think that was a pretty smart approach for them. And now, I think RPay is going to launch in Mexico soon, and there'll probably be some more exciting announcements on that front in the new year. Maybe new areas, new countries, and so forth. So I think one of the things in our plans when we work with our token deployers is to collaborate with them on how they're going to get distribution for their R tokens, how they're going to build flywheels so that it's not just another stable coin, but it has really sort of nuanced and specific use cases that no other stable coin can provide. Um, and so, one of the things we're super excited about is, maybe distributing some of those R tokens on the RPay app, as well as a bunch of other apps that we're going to work with, DeFi apps, wallet apps, and stuff like that. I'll say one more thing that kind of goes back to what I was talking about earlier. I think something that's super fascinating to me about this space is um, it's incomplete. There's this great Vitalik was at this at ETHCC, which was like in Paris in July, and he put up a couple of slides and he said the Ethereum uh, ecosystem will be about 55% complete after the merge. And what's interesting about that, and in crypto, we have kind of lots of different forces, right? There's people building, there's price speculation, there's trading. We're all excited about what's coming, and we're all kind of operating as if it's a finished product, right? Like Apple would never sell you an iPhone that's 55% complete. Tesla would never sell you a car that's 55% complete. But because tokenization and blockchains enable this sort of deeper community participation in the product development process, we have what we have right now, which is a world of last I checked, maybe about 300 million wallets globally, across all chains, Bitcoin, Ethereum, and all the other chains. And my sense is the level of deep commitment of those 300 million is probably somewhere in only the 1 to 5% range. It's not a big number. A lot of people just they do what I did in 2013 and 2015. They buy a little bit and then they just kind of go back to their day job, and maybe they'll check the wallet again, when there's a bull market or something. Um, so it's amazing how early we are, yet how big our expectations are for this technology to take over the world. I've just been kind of really getting grounded in that, just to manage my own expectations about how long it will take for us to build this new decentralized financial system. It just requires a lot of factors to sort of line up at the same time, including the base layer technologies to be completed, right? Ethereum has some high gas fees and is a little bit slow still, but changes are coming to that relatively soon. So yeah, I just wanted to acknowledge that. I just think it's super fascinating. I think when you look at, by the way, 300 million wallets. Now, those are not 300 million unique people on the planet. No one really knows, is that only 200 million people or 100 million? It's probably closer to 100 million. But let's just assume for simplicity that it is 300 million. That's about 4% of the planet. The internet, was about 4% penetration in 1996, I believe. And one of the things I experienced, before all that job history I just told you about, I also had another job when I was in college. I had two jobs. I served in the U.S. Navy as an electrician. So I served 5 years active duty there. But when I was in college, I worked as a forensic accountant for a law firm. And what I spent all my days doing is analyzing SEC filings, looking for irregularities, like things like the Enron fraud and other types of lawsuits against these companies that were committing fraud. And at the time, this was the explosion of the dot-com bubble in the late 90s. And so I worked with a bunch of forensic accountants, very conservative people, and they would all believed Amazon was a fraud and it would go out of business, right? And in fact, in I think the year 2000 or 2001, I can't remember exactly, Amazon's stock price went from like $80 or $100 a share down to about like 75 cents a share. When the bubble burst in 2000, it was pretty rough for it was so bad that most investors just went to play golf for a few years, or they went and got other kinds of jobs. No one was investing, and it really wasn't until 2005, 6, and 7, when we got things like Facebook and Airbnb and some of this other Web 2 stuff, Twitter, um, and then mobile with the app stores bringing us things like Uber and Instagram and all that. It really wasn't until the late 2000s that people recognized the internet was here to stay, or the mainstream recognized it. I would say probably younger people, it was essential to them because you had a computer lab on the college campus and you probably couldn't live without email at the time. um, but it's just I think an interesting thing to acknowledge, to think about how long it takes to build these things. Right now, crypto penetration is about where internet penetration was in 1996. And it wasn't even until about 8 to 10 years later that the internet really, really took off. In 2000, people thought Amazon was a fraud. Now Amazon is, one of the highly valued companies in the world. All the best practices, people look to Jeff Bezos and how he's managed and grown that company. But there were a lot of critiques back then. So I think that's just, that's a very long way of saying this is going to be an exciting decade. And the way, really, an exciting decade, an exciting several decades, and an exciting century when you start to really think about what the reserve long-term mission is. We're definitely thinking on a multi-decade timeline, not, we still have to figure out, what we're doing this month and early next year. And we're going to talk about it on this call. But really, it's the long-term planning that will make a big difference in the impacts that we can have.
Yeah, wow, there's so much there, but it's super interesting to, you always hear these kind of like overlaps of the internet.com bubble and crypto as it is today, and how early we are, because I guess when technology is early, like everybody focuses on the negatives, and then the people that are actually building legitimate businesses, as Reserve is doing, and is actually trying to help people with the technology, like really using it as it should have been, like what the vision of Bitcoin kind of was. um those kind of get pushed to the back burner, and then but obviously, like once crypto gets adopted by more people, then these people that have actually spent time building something legitimate will see the light at the end of the tunnel. So it's super interesting to follow. And you mentioned that like obviously infrastructure is still kind of missing some pieces. So kind of like bringing it towards your role at Reserve, like how do you how do you yeah, like what would you like to do at Reserve? Um, obviously like to kind of how do I say like both community wise and then anything else that you're involved with at Reserve. Like could you just
Yeah.
kind of elaborate on that?
Yeah, great question. I'm really glad you kind of poked into the community piece of it. Kind of the next, call it 12 months, we're really focused on identifying and collaborating with and supporting our token deployers. This is like the highest priority. And I'll talk about like how we'll get there. But it could be a couple of our token deployers, it could be three or four, and who knows, it could be more than that. As I think most people on the call know, we announced with MobileCoin in January, I'm sorry, in October. Well, they announced they're going to launch the electronic dollar on the MobileCoin blockchain. This is a pretty cool stable coin. The fees on it are about a quarter of a penny. And I can tell you that will be the least expensive stable coin to use on planet Earth when it launches. I was looking at different stable coins on L2s like Polygon and alternate L1s like Avalanche. And even those, and they're cheaper, because like right now, if you were to send $10 on Ethereum, you probably pay a dollar or $3 in fees for that, which may not sound like a lot depending on where you live. On Avalanche and Polygon, it's like 20 cents, 10 cents, whatever, which also probably doesn't sound like that much. But none of these will work, particularly when you get into microtransaction types of frameworks. So, for example, could be video games and metaverses or social tipping, where people are only sending 50 cents at a time. You can't have the kind of fees I just described. And it also comes in really handy when you want to just send remittances to Argentina or Mexico or Lebanon or even the UK. Those remittances typically cost anywhere from $8 to like $34. So those are like very much in the wrong direction. The electronic dollar on the mobile coin blockchain is going to cost a quarter of a penny. So that's pretty cool. And it has some great privacy features, end-to-end encryption. It's really fast. So we're excited about that one. So now the question is, well, who's going to be the next R token deployer after that? Or maybe even before that? And so we're developing a lot of conversations with different groups right now, including wallet apps, DeFi applications. So, like a wallet app could be like MetaMask or Zerion. Um, DeFi applications like DBank. Um, I think Zerion is also in that space that we're exploring with, as well as other protocols that we're, working with in some capacity or another. As most people probably know on the call, we've been working on a hackathon over the last month and a half. Just Googling right now just to see what our latest numbers are, because the hackathon ends on the 13th, which is next week. And right now, there's about 311 participants in the hackathon, and there's about 130 projects. So this is like a pretty big swing for us to start building community, kind of getting to that term you mentioned, Flamingo. We have to build community. The Reserve is not building stable coins. We built the permissionless factory for anyone to launch a stable coin. And we have a lot of resources to contribute to that. But we think those our token deployers are developers and entrepreneurs and other types of institutions. And so that's really like, and we're going to be communicating a lot more about like what these types of personas are. I'll just mention 6 of them for you real quick. And you might have heard this in some of the past AMAs with Thomas and Soham and Yen and Sinatra. But the first persona is DeFi developers and entrepreneurs. Um, their motivation is probably to take a cut of the revenue for the R token when it launches. That's one of the cool things about setting it up is you're getting a cut of it, and as long as you continue to contribute to that governance by the community, you might be able to develop an income stream for a long time. Um, you might be able to do that on multiple R tokens, in fact, if you happen to be really good at that. The second persona are crypto protocols and apps. So if it's a if you go look at DeFi Llama and look at the top 20 protocols, we're talking to all of them now, um, figuring out, like what would be the angle for them to launch an R token or not. Some of them already have their own stable coins. For them, the motivation is to attract sticky TVL. They can just drive a broader ecosystem's revenue and retention. If you look at the top 3 stable coins out there right now, which are USDC, Tether, and DAI, they're the business they're in is is not just about the stable coin. It's about earning yield on the collateral. It's about providing loans. It's about managing treasury services. So it's kind of like a foundational element into building a bigger business or building a bigger ecosystem. So we're talking to those folks. We're also talking to hedge funds who might, look to create something that looks like an ETF but it's in a fungible, useful stable coin. You can transfer it to anyone. Definitely going to be talking to TradFi institutions like BlackRock and Goldman Sachs. For whatever reason, in the last 3 weeks, um, you might have noticed BlackRock, the largest asset manager on the planet, has come out talking about how important tokenization of all these real world assets are. There's also a report from another company called Van Eck, which you might recognize that name. They've been working on a Bitcoin ETF for a few years that has not been able to launch. But I think they came out with a report about talking about 20 or 30 billion dollars of real world assets to be tokenized next year. So we're really interested in talking to these groups. They have. I was just looking at something a few days ago that I'm personally excited about. You might have heard of green bonds. There's about $4 trillion of green bonds out there right now, and there's an inflow of like 10 to 20 billion dollars of new green bonds every month right now. These are not tokenized yet, but so first of all, what is a green bond? A green bond is basically a loan, a debt. Except these are usually facilitated by companies that might be building like a hydropower plant somewhere, right? In fact, one of the bounties in our hackathon is for the frig.eco. That's FRIGG.eco, ECO. It's for their project. They're working with a hydropower plant that's owned by a Norwegian company. But the plant is in Rwanda. It's been operating for like 15 years. It has fairly predictable cash flows, and they're just raising $3 million. There's a lot of different ways to go raise $3 million. In this case, they tokenize it on Ethereum, and they're selling it to investors in Switzerland. And those assets could have really predictable cash flows and be part of a basket for an R token. That's just barely getting started. But as I mentioned, the opportunity is massive. It's multi-trillion. And so we're super excited to pursue that with those TradFi institutions. The last 2 personas, one is basically what I'd call rewards programs. Um, Chase Rewards, Delta Sky Miles, Starbucks points. We see a lot of potential in them bringing their rewards points onto a permissioned blockchain. And then we see some Web3 native companies launching out of the gate with rewards programs on a permissionless blockchain. Why did I say permissioned versus permissionless? Well, today Delta and Roblox and Chase, these are all multi-billion-dollar economies for rewards programs. So they have to be a little careful. They're kind of wrestling with the innovator's dilemma. They can't just put it all on the blockchain and that's going to solve their problems. In fact, it'll create a lot of problems for them. So they have to be very tempered in how they approach it. But one of the exciting applications of replacing points with a stable coin on a permissioned blockchain is they would be able to onboard and offboard redemption partners much faster. For them, their North Star with these rewards programs is loyalty. They want people to buy their core products more often and be happy about it and share it with their friends. And so if you can add if you can add and analyze quickly which partners are contributing the most, we can all imagine, it's kind of like a relationship. Your significant other, we've all had some that were amazing, and maybe we've had some that were not amazing, right? So one of the possibilities here is when you shift that to something like a reliable and trustworthy stablecoin, and you put it on a permission blockchain, you can basically do speed dating more efficiently with good analytics. And once you find what's working, what types of partnerships, you can do more of those. Um, the last persona or video games and metaverses. This is super nascent, but will increasingly become a big deal this decade. And this is especially where micropayment stablecoins are going to matter the most, because they can't, dollar, $2 fees in these ecosystems wouldn't work for them. So yeah, that's a group of some of the personas that we're going after. But the overall North Star of what we're focused on in the next 12 months is how can we drive $1 billion in TVL, and launch a couple of R tokens, and I'll stop talking in a second. But what's super exciting about that is once that first R token is launched and once the second R token is launched, we get all of us RSR holders. Now we get to do something with our RSR and we can earn some of that revenue. We can go stake in support of whichever R tokens that we are the strongest believers of. So that's super exciting.
Wow. That was really good. Thank you. Hey, so okay, one thing that I think of when all of these R tokens start to be built, like you're talking about, is obviously the collateral that is used. So like my mind goes to like current FUD about Tether. Do you think that like the opportunity cost of having R tokens built with Tether, will be like the FUD is basically structured that like Tether is not fully backed, and if all of a sudden all these R tokens got built without Tether, do you think that Tether would be like incentivized to disclose, or actually have full backing for all the different tethers, such that they would be included in collateral? Um, and then additionally, like another part of this question is, do you think there will be new stablecoin issuers that will come about, like U.S. dollar and pesos, etc., um, that come about to like for this collateral like surge? Do you think that will? What do you think about that?
Yeah, I'll try to answer it kind of in three parts. I'll talk about Tether, and then I'll talk about US dollar and other currency stablecoins. And then I'll talk about commodity backed stablecoins and all these other types of assets. On Tether, what's interesting about Tether is they are leveling out. Now, yes, there's always a lot of FUD, and To be honest, probably some of it was true at some point and might still be. In my heart of hearts, I believe it. But they have become such a important Lego in the crypto ecosystem. And thankfully, thanks to USDC especially, Circle and USDC have done a tremendous job of of demonstrating what a regulated centralized stablecoin should look like. With transparency on reserves and audits and things like that, and just leaning into compliance out of the gate. Tether really kind of focused on a lot of offshore activity. And of course, they were a first mover, and traders are just, it's a hard habit to break. They like Tether. But what I see Tether recognizing that USDC could be a very dominant player for fiat-backed stablecoins and could displace Tether. And in fact, they are displacing Tether. Tether once had 100% market share, and now they have a lot less. Um, so I think the good news is Tether is getting better every day. I think the current complaint on Tether is, USDC is backed by US Treasuries and cash. Tether is backed by Treasuries, cash. This is a little bit in flux, but maybe some government paper. Some commercial paper, and some investments, and some other things that we all can't see. Um, so that's a concern for people. But I think Tether sees the opportunity, and they see themselves being displaced, and they're going to compete. And so I follow their CTO on social media, and I think they're just increasingly getting better about sharing more and more on transparency. They're not there yet, but they're, like we've been, one of the themes of this call, everything is a work in progress. And by the way, when regulation comes, in what I think is probably laws being passed, the laws have been passed in the EU already. The laws will probably be passed in the United States next year, 2023. And most of these laws probably will implement in 2024 or 25. When that happens, there will be, I don't think it's going to be possible for a centralized fiat currency to operate without full compliance with the EU and the United States. So, and I think Tether will totally step up for that role. That's my thoughts on Tether. Now, the second piece is, let's talk about USD and other currency pegs for stable coins. I think, right now, the United States dollar is used in something like 80% plus of global trade transactions, particularly for oil and other types of international trade assets. US dollars have the biggest network effects, which is a fun story to get into on why that is. It's kind of like the monetary policy of the last 100 years. And now what we're seeing is stable coins. It's kind of counterintuitive, right? Because we're all reading about rhetoric and FUD on social media, and the government's going to regulate and this kind of stuff. But first of all, the government is going to regulate, but dollar stable coins actually make the US dollar stronger, right? This is another example of network effects for the US dollar, the dollarization of everything, which is important, I think, to the government. Now, I'm not in the government, and there's a lot of other folks that are, and they might totally tell you the story differently. But the US dollar is not only it's under attack from a lot of different directions: Russia, China. There's a lot of folks out there who don't necessarily want the US dollar to be the global reserve currency. But dollar stablecoins really propagate those network effects. They just have to be, particularly if they're centralized stablecoins, they're going to have to be behaved within the law, as those laws become increasingly more clear. Other currencies like euros and pesos and pounds, I don't know, to tell you the truth, if um, if they will, I don't see, I don't think I personally see how they could gain near a meaningful traction. I actually see something different. But I do think there are opportunities for them. Those can still be billion-dollar economies. They could still be $100 billion economies. But unlike the U.S. dollar, which is like $100 trillion economy, globally, global trade, dollars, that's $100 trillion opportunity. Some of these other priced currencies, might only be 100 billion or 10 billion or something like that, which is still an interesting use case, and it's needed in the market. By the way, I'm not an expert at all on international currencies, so I probably should stop talking about them now. There's probably some other smarter people on that, but that's what I'll say about those currencies. The other piece of this, though, is what is going to be the right backing for these asset-backed currencies. And so it could be some of the existing currencies like euros and pesos, but it could also be securities and treasuries and tokenized real estate, tokenized lending, really the hyper tokenization of everything. Even advertising is getting tokenized. And I don't think it's going to happen anytime soon that we're going to see stable coins tokenized with advertising. But if it is a valuable, stable asset that has better price discovery, I could totally see this happening, at least for a B2B type of use case. So, I think the real path that we're going down is not, pegging to the US dollar or pegging to the euro is what I would call a temporary meme, right? The US dollar is a meme. Bitcoin is a meme. These are just easy ways for us to communicate in a language that everyone understands. The US dollar is probably the most dominant language on the planet, more so than Chinese, more so than English. More people probably combined understand dollars better than English and Chinese, right? It's a big, big number. It is, in my opinion, the universal language. I don't necessarily like that, but it is what it is. But and why is that? Why is that the popular meme right now? Well, because the US dollar has been building network effects for 200 years and very successfully doing things like making an arrangement with Saudi Arabia in the 1970s to price global oil in dollars. And also, there might be some traits of I know the United States is definitely not perfect, but, it appears that the US has done some things right along the way. Um, and, built a leadership position in the global economy. But if we study history and we see that empires don't last forever, currencies don't last forever, I think we'll get. I think I'd mentioned this in my tweet the other day. We'll talk about stable coins, but we're also going to talk about flat coins and unpegged coins. Um, I think the future of these currencies are probably unpegged and represent the value of the underlying assets, which is really a big game changer compared to how US dollars work, right? US dollars are currently worth like 80 or 90% less than they were 50 or 60 years ago, right? Because of inflation. So I don't know if I properly answered the question, but I think that's where it's going is unpegged money.
Yeah, I mean, those are some super interesting points, and I mean, it's going to be obviously super fascinating to kind of follow and see where where that leads to. You mentioned, like some art token backings, potentials, or like different things that they can be backed by, and so that kind of leads me into my next question: is like, do you see um, art tokens being used for charities or NGOs or anything along those lines? Like, how do you see that kind of play out?
Yep, I do. I think so. Yeah, I think someone shared this in the Discord a few weeks ago about the Red Cross. Uh, considering some stablecoin applications. There's a group that we're already in touch with. They raise money and they distribute it to refugee camps. Uh, it's really fun. These are not fun facts. These are just facts. But there's about 100 million people on the planet that are displaced due to violence, war, um, a number of other factors. About 60 million of them are actually in refugee camps globally. That's how many there are. And Another thing I didn't know, this will really probably surprise everyone on the call. The average time that people spend in refugee camps. Do you want to take a guess, Braden?
2 years?
It's 20 years. They spend 20 years of their lives in a refugee camp. So it's not a temporary thing. It could be someone's whole life, or at least a good portion of it. But one of the challenges is distributing money to these camps from NGOs, right? Some of us have participated in different charities and donations and so forth. These refugee camps are like small cities, and getting money to them, and the way they get money to them is they use the traditional banking system. They use PayPal, they use local banks, they use banks in Canada, et cetera, et cetera. It's so difficult, because these are legitimate institutions that are distributing this money. They also have to comply with US OFAC compliance, all the regulations of a money transmitter or money service business, depending on kind of what their specific role in it is. So they've got to comply with all these laws. It's so difficult that there's some parts of the world, like in Sudan, South Sudan, they don't have any options to deliver money there. It's so complicated. And so this is one of the reasons why I'm excited about the electronic dollar, EUSD, that MobileCoin's working on, because it could potentially be a solution for that. We're having a conversation with this group. Only distributes about 70 million dollars a year, but we're exploring that with them for those types of distributions, charity disbursements. And then, one of the ideas we've also been working through, and I'll talk a lot more about it in coming weeks, is like a green dollar. What would a green dollar look like? Well, as I mentioned earlier, there's these $4 trillion of green bonds out there. There are trillions of dollars of of carbon credits out there, and a lot of them being tokenized. We think there could be a future where there's a green dollar that is partly or completely collateralized by these types of green assets. There's even folks that are working on tokenizing rainforest, and that could potentially be an asset and an asset-backed stablecoin. There's Regardless of kind of what you believe or not about the ESG movement, it does have a lot of flaws. But Wall Street and BlackRock in particular, the largest asset manager on the planet, are very committed to it. And there are regulations coming in the United States and around the world to increasingly require quantitative and qualitative disclosures by all the companies that are operating. And the reason they want to voluntarily disclose that, or they might be required to, is because all of these countries have big goals that they're going to make commitments. You're hearing about the different climate conventions around the planet. Countries are making commitments to decrease their emissions, and this is one of the ways they do that. So as you see a massive tokenization, first of all, as a massive effort towards green bonds and carbon credits and rainforest assets being preserved, all of these things can be tokenized, and they could potentially be in a R token basket. The other really interesting thing you can do too is you can take half the revenue from that R token and direct it back to charity. This is, I'm definitely out on the lookout for people that are already in this ESG movement, that might want to build a currency like this. We think this could be really interesting for someone like American Express or BlackRock, who they want to kind of reflect to their customers that they are paying attention, tuned in, and taking action on kind of this bigger discussion. And so we think a green dollar could be a way to do that. And I think that would be one example of it.
Well, yeah, I mean that is a lot to think about. Well, I mean, obviously, Reserve transitioning from a single stable coin to a platform was good for a lot of different reasons of like versioning, but it really opens up the possibilities of what you can do with our tokens, and I think that's um, very very good. Can I ask though, what does your like day to day look like? You're obviously exploring all these different things that people can do with our tokens, people and organizations. Can you talk more about, what your day to day looks like, and are you involved personally in conversations with these people, or?
Yeah. Yeah. So my team is we our team is responsible for two things. One is business development and the other is community. And really, when you think about it, business development is kind of a subset of community, right? The community could be entrepreneurs, or the community could be institutions like BlackRock. So what we're really focused on is how do we grow this community? And I would welcome advice and contributions from anyone on the call here, different ways, interesting ways to for us to build authentic community, people who want to contribute content, storytelling, relationships, introductions, ideas for how to make our community better and stronger. um, uh, so I spend my days working with the team. I work with Sinatra and Smetty on our team. I work with Soham and Thomas on our team. And I am involved in a lot of those direct meetings with potential R token deployers. Um, right now, I'm going to just pull something up here real quick. Um, we're especially focused on this hackathon and protocols and wallet and DeFi apps, actually. Um, the and so in the hackathon, I went over some of the stats earlier. In the hackathon, there's probably 30 different people working on different content bounties, and then the rest are working on collateral plugins and the grand prize for the best innovation. And I mentioned this at the beginning of the call that I was kind of talking about it with respect to Vitalik and the Ethereum ecosystem. Vitalik said Ethereum is about 55% complete after the merge. Similarly, with Reserve, on October 10th, we launched the permissionless protocol. Right now, we have a hackathon underway that's building a bunch of different collateral plugins. These are the money Legos to build different types of R tokens. And even though, by the way, I talked a little bit about green bonds and real world assets earlier, I do want to kind of level set where we think the opportunity is near term versus long term. You know, to build great R tokens, you need assets with a lot of liquidity. You don't want something that only has 3 million or $10 million of liquidity. It's not enough. You need assets that have hundreds of millions of dollars or maybe billions of dollars. And so that kind of keeps us hyper focused in the top 20 of DeFi Llama. If you were to go look at some of the protocols there, like the Curve ecosystem. Um, what we're really especially focused on right now for building our tokens are looking at collaterals that are, these big popular assets like USDC or Pax Gold or even something like Tether. But it could even be like LP tokens from the Curve ecosystem or something like that. Um, So yeah, what I'm spending my what I this is I'm coming up on my 3-month anniversary. A lot of it, there's a in my opinion, the protocol is you don't learn it in a day, or maybe I'm just a slow learner. I shared with you how I learned about Bitcoin and Ethereum over years of getting involved with it. So I've been really spending a lot of time over the last 3 months of understanding how it works, and I'm still doing that. And I will probably still be doing that for a while, into next year and the following year, because there's so many possibilities. In fact, with this hackathon, what we're hopeful for is that creative entrepreneurs and developers are going to come up with ideas that we've never even considered. We've never even fathomed it. That's really one of the cool things about having an open community. Is the best ideas probably will not come from me or my team. They're going to come from you guys, or people that that you might want to introduce to Reserve, bring them to the Discord so they can participate in that way. But yeah, just kind of at a high level, I talked about this TVL goal of about $1 billion by the end of next year. There's really three things that drive that. One is deploying our tokens. The second one is integrations, whether it be with DeFi apps or with other protocols. The third thing is helping with liquidity for these new R tokens when they launch. I think folks know it here on the call, but we're a top 10 holder of Convex tokens. And so we can, when an R token launches, we can direct liquidity to it uh, across the Curve ecosystem pretty quickly. And then, uh, kind of leading up to those three things I just mentioned, there's a bunch of different activities that we're spending time on right now. I talked about the hackathons. We're going to be launching a grants program next year. We'll definitely be at a lot of events and conferences. Um, you know, uh, Really boots on the ground. We might do some more experiential events. Um, Even in Discord, we're going to launch some roles and some quests within Discord. One of the things I'm excited to do is start to identify like who really is diving into the protocol and wants to help us build it, wants to contribute, whatever their superpowers are, whatever that is. They could just be copywriters, they could be artists, they could be developers, they could be liquidity experts, or they could just be mathematics experts. We want to start identifying those folks and recognizing them and finding different interesting ways to work together. And look, we might do some fun events next year too. So the people that achieve those roles will get the invitation for those events. I think Sinatra will probably announce the roles sometime in the next few weeks, is my guess, or for sure right after the new year. And there'll be a lot of different ways that folks can move up in those roles, and there'll be some cool benefits to it. We're doing a lot of content, live events like this, essays, videos. We will be doing some press and podcasts. We're going to be building some dashboards, and we're going to be launching a newsletter pretty soon. All of these things that I just kind of mentioned are kind of like what I'd call the top of the funnel, right? How do we bring people into the bottom of the funnel where the folks who are on this call right now, this is kind of like what I'd call maybe the middle of the funnel, kind of getting into the bottom of the funnel, right? You're already part of the Discord. You're showing up on a Sunday for this call. You obviously care. So how do we, right now there's 19 people on the call. How do we turn this into 40 next time? How do we turn it into 100? We want to, and give people the tools and information to bring other folks that are really interested in this to join us. So what am I spending, just to kind of recap, what am I spending my day to day on? It's on planning all of that, orchestrating all of that. And especially as we go into next year, I'll have to spend a lot of time on the road traveling. We'll have to go to like uh, probably Singapore and Seoul, Korea, and Texas and New York City, and probably Barcelona and Paris and Dubai. That is it can be kind of grueling, that level of travel. but what we're doing right now is kind of getting everything lined up so that we can do that really efficiently and be very well prepared. So that's what I'm spending my days on now. But in 4 months, I'm going to be spending it in more airports and on airplanes, having meetings.
Okay. So, I mean, that's a really good explanation. One thing that starts making me think of is, okay, so you're going in person and you're talking to people, and then even if you're doing it, just over the internet and talking to people as well, about art tokens, and hey, maybe this could be for you guys, etc. Um, what are some obstacles that you think you will still be facing when you're talking to those potential R token users, or deployers, even after the all clear and the plugins are complete? What do you think's are going to be like the how to convince people, or things that they might not be convinced of?
Yeah, I think this is a great question, and I invite anyone to help on this. It's kind of like the AMA we did in Discord a few days ago. Um, the protocol is really sophisticated, and being able to speak to it clearly, succinctly, and with conviction, that's like a work in progress for me. I'm always trying to get better. I'm trying to find ways to explain things. Everyone's different. Some of us like spreadsheets, some of us like visuals, some like to just have a conversation like this. Everybody understands this differently. And so coming out of 2022, where you have the implosion of Terra Luna, and then you have these centralized uh, players like FTX and Celsius, people are going to be very shell shocked, as to everything that's just happened here. And so finding ways to explain it in a way that folks can get it. It's it's explained in the documents, but and in blog posts and things like that. But there's always another way to explain things with metaphors and analogs and stuff like that, for people to really sort of break through and finally get it. To my opinion, stable coins are one of the most complex primitives in all of crypto. I left this out of my intro earlier, but before I came on full time here at Reserve, I had already committed about 12 months ago to going really deep on stable coins, because what I could assess was the following: is DeFi is the tip of the spear for all of crypto innovation right now. There's tens of billions of dollars locked up in it. And even though I came from like content businesses, like television and video and entertainment and stuff like that, uh, and I can't wait for us to see really interesting token models for that, or for e-commerce, or education. It's going to happen in DeFi first. And inside of DeFi, the tip of that spear, in my opinion, are stable coins, these asset-backed currencies, because stable coins are the killer app of crypto, other than maybe Bitcoin and to some degree Ethereum. But uh, stable stable coins are like one of the three major killer apps that are working today. Um, and by the way, it's barely even adopted for globally at this point. So there's a lot of room for that to grow. But the reason I decided to commit to stable coins inside of DeFi, inside of all of crypto, is because the mechanism design for how these different stable coins work, um, struck me as some of the most innovative successes and failures, and it would be the best place to learn. And then take that language, and we can use take that learning and use that in other activities in DeFi and across crypto. Um, so that's kind of. I think I might have lost track of your question, though. Did I? I think I missed your question, didn't I?
Yeah, so basically just in conversations with people. Yeah, I mean, I
The
find
block
it,
is,
and I'm not trying to say like, I explain this
yeah,
to a lot of people too, but
yeah,
it is kind of hard to talk about money, especially with, how shady and like pump, pumpable weirdness to crypto. It's like you talk about crypto to some people and it's like in one ear out the other. So I
yeah.
guess that's like, what are some obstacles?
No, thank you.
Even
Thank you for
beside. Go ahead.
thank you for reminding me. I'm sorry I had lost it, but now I got it. I'm back. um, the obstacles are, I kind of talked about that top of funnel and the middle of funnel and the bottom of the funnel earlier. So what we're trying to do is bring people all the way through the funnel, and there's different degrees of commitment. Some folks are just maybe looking to speculate on price and not necessarily dive deep on the protocol, which is okay. That's fine. No problem there. Um, because we'll need them later when we want people to stake and support different stable coins, and those people they can earn some revenue. Um, but I think I think the challenge is really knowing who you're speaking to and what their understanding and biases are, and trying to find a way to like relate it and listen to them as opposed to just pitching them. And so, when we're doing all these activities that I mentioned, traveling and meetings and conferences and hackathons and content, obviously, someone who shows up to a hackathon and commits to trying to win the bounty, that might be a much bigger commitment to the ecosystem than, someone who uh, just says, I'm looking for the hot new token to invest in. I mean, obviously, that's a pretty extreme example I gave. So we're trying to find the folks who are committed, that actually are already believers in crypto and might already be believers in reserve. Because I think, there's a great thing. I had a boss once. So way back in the day, I worked I worked in a, I was a butcher in a meat market. This is when I was like a teenager. And the boss said, he's like, I'd tell him, hey, I'm going to do this, I'm going to do that. And he'd say, do it and then talk about it. And I think that lesson stuck with me, and I think it applies a lot here. We do have to talk about it. We have to try to educate people and and collaborate, but the seeing is believing, and I think once people see our tokens launch, and see what it looks like to stake on an R token and to earn some revenue. And they see the stability of a portfolio of R tokens. This is something I didn't explain very well on the AMA the other day, but you might have there might be an ecosystem of 5 R tokens out there, and it's true. One of them could have a black swan in one of their collaterals, or maybe 2 of their collaterals. But if they're designed properly, they've diversified that risk. And while that R token might temporarily take a hit, the other R, these R tokens are not going to be copycat. So there'd be no reason for them to exist. They've got to be different. They've got to serve different purposes, or as I call it, a different job to be done. Um, you would have those other 3 or 4 R tokens out there, that are generating revenue and attracting RSR stakers. So you've really got like this really interesting opportunity for an equilibrium of R tokens. Some of them taking hits, some of them failing, some of them succeeding, some of them maybe being amazing successes. Um, so, back to the let's do it and then talk about it, the lesson I got, a long time ago. Um, I think, that's what I'm really excited about is doing all the things I just told you about, but let's get these R tokens launched, because that's when people will really believe in it. I saw the same thing, by the way, with Ethereum in 2016 and Bitcoin in 2013, 2014. There were a lot of naysayers then, and it just takes time for people to see that this is real. it's authentic and can contribute a lot of value. And once people see that, then that is the strongest convincing mechanism. When people saw that Amazon survived the dot-com bubble burst, and then Amazon introduced free shipping and some other cool stuff. There's a lot of people, and I know Amazon doesn't offer that to all parts of the world. But if you're in one of the lucky spots, the people that get it, they can't live without it.
Well, yeah, I mean that's a good answer. Flamingo, did you? So I guess like it is 15 minutes after. So I can ask maybe like one more question, but I'm wondering how everybody is doing on time. Um, I would say like I would want to, instead of asking that question, to try to ask some from the community. If you guys could raise your hand, but while we're figuring out time here, James and Flamingo, how are you guys doing on time?
I'm good. I'll stick. I'm here for at least another 45 if you need it.
Okay.
Um, yeah, I actually need to run soon, but I mean, you guys, keep going. Uh, that'll be awesome. I'll just listen to it after.
Okay.
But I could definitely stick around for one more question.
Okay. Does anybody in the audience have any questions? You just have to use the raise your hand. It's in the top right of the screen for me.
I'm actually kind of curious just to see, like, James, if you can kind of uh speak on, I guess, working with the people at Reserve, and how that's kind of going, and if there's anything that's surprised you that you weren't aware of before you had joined. I mean, good surprises, obviously. Um, yeah, and kind of how that's going, and, like, the team you have around you, and the support you're getting.
Yeah, let me think about that. I'm trying to see if there's anything obvious. I think I don't know if it's a surprise, but it is definitely a positive. Is I feel supported. Uh, you know, um, uh, the protocol is complex and the learning curve steep, and the objectives we have to accomplish are pretty aggressive. And so, getting to work with Smetty and Sinatra and Soham and Thomas and Nevin and the engineering team to get me up to speed, so that I can be effective in my role, and like just being supported, it's super awesome. That's something I really appreciate. And yeah, just on a personal front, it's interesting. Someone asked me a few days ago what it was like to shift from being an investor to being, an employee. And I really like it. I like having accountability with other people. It's doing it all by yourself is there's it can be a little bit isolating sometimes, and staying on a track. But when I've got promises made to the team on something, I kind of just enjoy that. Eh, you know, last week I had to pull a couple of pretty late nights, um, which if it were just up to me and I was setting the schedule, then, I'd be, maybe I'll do that next week. So that's been kind of fun, just to do that and to be in this. I think, it doesn't seem like it, but I think this is a very fortunate moment for us to be launching the protocol and pretty soon launching our tokens after we get past this all clear. If this were happening in the middle of a bull market, I think it'd be really problematic for us. You know, right now you can find people who are really authentically committed to doing the work. When those bull markets come around, you get, the gold rush again, and it's really hard to sift through things. So I'm actually pretty thankful that this time, we've all seen the meme on social media that bear markets are for building. and I think that's really correct. So I'm actually thankful for that, and I think it's going to put us in a great position as we get into next year and this in the latter part of next year and into 2024.
Yeah, that's a really good point. And you mentioned authenticity and just from like following the project and communicating with Nevin here and there and other team members, like um, now that that we're in this like crypto winter, bear market, whatever you want to call it, um, Reserve hasn't shifted their mission, their vision. They haven't like they haven't cut corners. They're still sticking to what they want to achieve, and that's been the same since I've found the project. Right, always this like long term thinking. We plan now for 20, 30, 40 years down the line. And I don't know, like I'd like to get your perspective, like how impressive is it to now be working with these guys daily? Because like for me as an outsider, or just a community member, the little bits of pieces that I've gotten, through like governance discussions and things like that, you really see how in depth the team breaks things down. And before they implement decisions, they literally just chop it up into as many pieces as possible and think about the consequences down the road if they were to implicate things today. So have you seen that? And like, what's your take on that? Because from my point of view, like that's super impressive. And it's interesting to really like pay attention to the amount of detail that you know, they like go through.
Yeah, it's it is for sure impressive, and it's helpful for a mission this big and a plan this long term. I don't know how one person could do it. You have to have collaboration partners for that. Um, Different perspectives. I find that I can be a driving force, but I need critique along the way. I need people to poke holes in the story because I can be the first one to drink my own Kool-Aid. And so I think that's one of the really powerful things about working with a team with different viewpoints is disagreement until we find what the true answer really is. So it really forces you to dig deep on what is the strategy and what are the tactics to get there and why are we doing this. So that level of depth, I think that's probably what I was sensitive to when I met Nevin 4 years ago, and it's evident inside the company. The other thing I'll say that I really love, you know, it's so hard to do all the things that need to be done and to comprehend it within a uh, an initiative or a project or a company, and it's so easy to be on the outside and just kind of critique it. I've been there, I've done it, I've been the critic sometimes, and I see like the value of skin in the game to build something. I've seen along my journey, I've worked as a consultant, I've hired consultants, but having people that are full time on the team, committed, even if they're, you can even still be really committed, even if you're not on the inside team. But it's the value that's contributed from that is uh, it it doesn't compare to some advice like I think you know we should launch a green dollar. That's a great piece of advice, but launching a green dollar is not easy. There's a lot of work involved in that, a lot of stakeholders that have to come together to make that happen. The hard part really isn't the ideas. The hard part is the conviction and the follow through, and that's something I'm really enjoying. I'm being part of the team because um, everyone has that level of conviction and is following through. And sometimes we uh, not every decision is the right decision, but when you're committed, you'll figure it out. You'll identify it and modify the plan pretty quickly. So, hope that answered your question.
Yeah, yeah, definitely. I just kind of have like, I mean, I guess it's not really a question, but just like a follow-up to that, I mean, it's very impressive to see how they continue hiring talent, and they never, you know, what's the word I'm looking for? But they always stay true to themselves, and they know who they're looking for and who will help them achieve their goals, and they don't cut corners when it comes to hiring because the person that they're looking for is not available, and then hire somebody else instead, right? They seem to always kind of take the time, do the work, and hire the right people consistently, which is really amazing to see. Um, and with that, I'm just gonna hop off and I'll let you guys keep going at it. Thanks, James, so much, and Braden for hosting, and it was great talking to you, James. And yeah, we'll talk again soon. Thanks, everybody.
Yep. Thanks, buddy.
Thank you. Take it easy, man. So I guess like I only have one small question left. And so is this the first time that you've gone from VC to a team member, um, like in your career?
It's actually it's kind of the second time. I There's a project that I worked on, which was a marketplace for sustainable products and ethical brands. Where I wasn't an investor, I was an advisor initially, and then I went into a full-time role to help them build for a while. Um, uh, yeah, that would be the second one. But I actually like it, even though Flamingo's gone, it's kind of like aligns with what he just said. You really want to find the right people to join the team, and people that have deep conviction, that are not just there for the money or something like that. So, ironically, I've kind of been on the journey with Reserve for 4 years now, even though I only joined full time 3 months ago. Um, that strikes me as an interesting dynamic for building teams in the future, is going out and getting a bunch of smart angel investors to participate early, and then potentially bringing them in to a much bigger role later on. I don't know if it's a pattern that's easy to repeat. Not all investors want to do that, but I was super excited to do it here.
Yeah, I mean, I think it's really cool that you joined the team. I think that you have some very good perspectives on things, and I've enjoyed this interview quite a bit. Um, I don't have any more questions, unfortunately, and nobody from the audience has risen their question or their hand. So I think we're going to end it here. I appreciate you coming so much, and this has been really good. Do you have anything else you would like to add?
No, I think it's a good time to break for lunch, and I'm thankful for everyone in the audience for showing up. And yeah, please DM me, or just drop a message in the public Discord if you have ideas on how to help with some of the things we talked about today.
Cool. Thank you so much, James. Thank
Yep.
everybody for coming, and just hope you guys enjoy the rest of your Sunday.
Yep. Thanks, everybody.
Later.